Hi there, welcome to another in the Investment in Shares series. This time I want to take a look at BHP and whether it stacks up as a good investment or not. Now there's certainly some pluses and minuses, so I want to have a quick look at that. Now BHP, just having a look at the fundamental picture on a global level. The US housing market is recovering and there's very good jobs growth happening at the moment, so certainly things are improving there. China is probably at the bottom of its economic cycle at the moment, despite the rhetoric in the media, if you really look at the facts about China. The fears over Europe seem to be receding, and certainly I think a lot of the fears over Spain and Italy were pretty misplaced. Looking at commodity markets, the price peaks have passed, certainly in iron ore and coal. I don't think there's very much doubt about that. But I think a lot of people are not acknowledging that the volume peaks probably haven't been hit yet, and then we're still going to see increasing volumes of those bulk commodities. Now copper's remained at pretty highly profitable levels for the low-cost producers, and frankly that's the only sort of companies that you really should be looking at investing in or trading in. And the other base metals, nickel, etc., are also recovering fairly strongly. And of course gold just keeps marching on, and the upside for gold I believe is huge. So let's look at the financial metrics of a stock like BHP. Now the return on equities have been very good, and they're still very good by most yardsticks, but they have slipped from up around the 60% level down to just under 40% now. So the trend is not all that terrific. Profit growth has also slipped in the last 12 months. But the question is, are we now at the bottom and are things going to get better? Now, based on the forecast for 2013 and into 2014, BHP certainly isn't cheap. It's now sitting at 13 times this current financial year's profit, which is not that expensive, but it's not as cheap as it looked 12 months ago. Now BHP have increased their dividend by 76% over the last 5 years, which is okay, but it doesn't really compare against some other potential investments. And the total shareholder return, if you want to look at the dividends plus the capital gain or capital loss as the case may be, over the last 5 years since before the GFC, has been negative 2% per annum. So in other words, you've really made no money owning BHP as an investment. Now, what the future holds, no one can really be certain of at the moment. So let's have a look at the pros and the cons. The positives are they've got the best suite of tier 1 long life assets in the world. I don't think there's much question about that, and that is a major plus for the company. And they've got a huge diversity of commodities across minerals, oil and agriculture. But on the negative side, the rising cost of doing business in Australia is a real problem, and that's not only the shortage of labour, it's government meddling, it's the cost of building a mine in Australia. So that is a negative. And they've been a bit accident prone over the last decade or so, and they've had several large-scale projects that they've had to eventually write off billions of dollars in misplaced investment. So there certainly are some pluses and minuses. Let's look at it from a valuation point of view. The valuations at the moment, depending on the methodology that you use, seem to be typically in the range of $38 to $45, and the share price is getting close to 35 at the moment. So on those grounds you could perhaps argue that there might be still some upside in the share price. Now looking at it from a technical point of view, it seems to have formed a base at $30. We'll have a look at the chart on the next slide, and it would appear that a new uptrend has commenced, and the moving average is confirming that change. So here's the chart here. You can see with the blue line is the moving average has definitely turned up in the last couple of months. We've formed higher highs and higher lows, so that's the indication that we're into a renewed uptrend. Now the question is, will it make it back to $50? I don't believe so in the foreseeable future. It might make it back into the 40s in the next 12 to 18 months, but it would be pretty hard to see new all-time highs anytime soon. Now let's look at a couple of alternative investments. If BHP is not a really solid investment, and a negative 2% shareholder return over the last 5 years is not really what you want. Let's have a look at a couple of alternative investments. Now, one of them in the non-resource area, if you want to stay out of resources because of the uncertainty, is an outstanding company called Macmillan Shakespeare that are in the salary packaging business and also the vehicle leasing business. Now, they've been producing very robust return on equities between 45% and 60% since before and through the GFC. The average profit growth over the long term has been 30% per annum. So that's very strong profit growth. They're probably fairly fully valued at the moment, but you'd be looking to buy these on some kind of pullback in price. Now, their dividends have increased by 276% over the last 5 years. And the total shareholder return has been about 30% per annum over 5 years. Now, you compare that with BHP, which is effectively flat to slightly negative. So a company like Macmillan Shakespeare, to me, represents a massively better investment than BHP. And their future prospects really look as robust as they've been over the last 5 years. And there's the share price as a consequence. And you can see the share price only about a year ago was trading at $7, and now it's trading at about $12.80. Now let's move on and look at something in the resource space if you want to get a more direct comparison with BHP, and probably one of the best financial performers in the resource space and probably on our entire stock market is Monadelphous Engineering. They have very high return on equities above 70% consistently for the last 10 years, so that's 20 reporting periods. They're a company that never misses a beat. Profit growth typically between 15 and 20% per annum, again over the long term. So they've been a terrific performer. They're trading at almost historic low valuations at the moment. And they've shown 150% rise in dividends over the last 5 years and offered a total shareholder return, that's capital gain plus dividends, of about 14% per annum averaged over the last 5 years. So when you compare that performance again with the likes of BHP or Rio Tinto, there's really no comparison in terms of a productive investment. And their future prospects look as secure as ever. So there's the share price. We've seen a rise over the last 4 or 5 years from around $5.50 just after the GFC to be trading now above $20. So they're the sort of investments that you could consider as alternatives to what everybody thinks is necessarily the best investment in a BHP or a Rio, or even into some of our major banks. Now, just a reminder, this is general advice only in this video. We don't know your circumstances from a financial perspective at all, so do not act on this information without examining your own particular needs. Now, there's plenty of information on our website. I'm constantly producing these sort of information and training videos, and there's a step-by-step process to building wealth from shares that you can tap into. So if you want to go to specialistshareeducation.com.au, you can register to receive this information on an ongoing basis. Hope that's useful for you. Cheers.